Hello and welcome to Esther for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving right into. Federal Reserve Chair Jerome Powell suggesting rate cuts are coming, and investors, they like what they heard. It sent markets soaring. At the end of the session, all major indices closed higher. And whether you've been at the investing game for decades or are a novice, there's something to be learned about all styles of trading. We're taking a deep dive into investor patterns with an expert. And on the last trading day of the week, we're also wrapping up our Jackson Hole Symposium coverage. We're having an important discussion with Esther George, Federal Reserve Bank of Kansas City, former president and CEO. Will get her expertise on the path forward for the Fed and the economy. Well, the retail investor appetite has been making its way back into the spotlight as retail traders lean into the risk-on strategy with their investing. Markets have seen momentum pick up in meme stocks and non-traditional assets such as crypto. But what is behind the behaviors and sentiments for these self-directed investors? Well, Fidelity Investments Vice President Heather Knight joins us now for a closer look. Heather, it is great to see you. So, interesting study, and one data point in there, Heather, is when you suggest there's more confidence from self-directed investors, you say, versus seasoned investors. Explain that for us, Heather. What could be driving that?
Yeah, so we actually did a study, and what we found is that folks that have a little bit more than maybe 10 plus years experience, they tend to be a little bit more cautious, right? So they're looking at maybe historical things that have happened to them. They've been through the ups and downs of the markets and so forth, whereas somebody who might be less tenured, so 5 years and under, those folks typically might be a little bit more excited about what's been going on because they've really been investing in a bullish time frame, right? So the last 5 years or so, it's been a good opportunity for them to be able to jump in. So we see a little bit of a difference there when we started to take a look at them. So you'd see a little bit more optimism, I think, from the younger inexperienced investors or 5 years and under, and then a little bit more with the folks that are 10 years and up.
And yeah, that was interesting when you talk about how seasoned investors express sort of relative more caution. And Heather, we chalked it up to, hey, they've just seen a few more market cycles come and go.
Yeah, I'd say it's a little bit of that, but also, too, is what we noticed is that there's a little bit difference in the type of assets, too, that they're looking at. So when you think about a younger investor, they're looking more at, in fact, when we took a look at their top three investment choices, a younger investor or somebody who was newer 5 years and under, they typically invest in cash, individual stocks, and even cryptocurrency. And that's kind of been one of the things that's been going on from a thematic approach the last few years. Whereas somebody that might be a little bit more tenured, say that 10 year and up, or they've been around for a long period of time, they're still kind of investing in, while cash important, individual stocks and mutual funds.
Here's another stat that caught my eye, Heather, I want your take on. So nearly half of self-directed investors think the market will perform worse in the next 12 months, right? Most, though, 64% it looks like, think their own portfolios will perform better, the same or better. Explain that for us.
Yeah, so that's probably a little bit of the educational aspect of it. So feeling like they have a little bit more control, they have information that's related to them, they're involved in a lot of education, upskilling. So I think that there's a little bit more confidence in the things that I feel comfortable with when I'm investing, rather than maybe taking advantage of areas that I'm not sure or I'm not comfortable with. So I think that you see that optimism there, more so along the lines of what it is that you're truly invested in, what you're comfortable investing in. And certainly a lot of that is technology too, right? So they're looking at that top technology sector. Those are names that we see in our household every single day. So it feels like if I'm invested in those areas, that maybe I can't go wrong, which isn't always the best thing. We always want to make sure that we are taking a look at our entire portfolio as well, and making sure that we have the right information that we need in order to be successful for our own financial goals.
And when folks are getting their information, Heather, how much line of sight did you all have? Where are folks getting their information? And was that a difference, a marked difference between these two groups?
Josh, it is a big difference. So when you look back 10, 15 years ago, there probably was very little information available on the internet, and in fact, even education, right? These days, it's everywhere. So you have social media for sure as part of that, but I'd say most firms, like including Fidelity, we have a ton of free education. So our goal is to make sure that folks know how to use this information to be a part of their overall investing strategy. So I think that the education and what the accessibility through the internet internet and through technology is certainly something that gives us a little bit more confidence. But you also see a lot of drive. So we always talk about skill, will, or time. People are making the time to be a part of this and to understand it, and using the ability that they have across the internet to upskill. So it's definitely a difference, something we hadn't had in a long time ago in the past.
And Heather, we did, the big, of course, market moving event today. Jay Powell, Jackson Hole seemed to suggest a policy shift was on the way. How do you think through, Heather, how maybe that could impact the attitudes, the behaviors we're talking about here today?
So I'm not sure that it's going to actually change any of the behavior. So what we've seen is pretty much consistency. We aren't seeing a lot of people kind of jump out of the market or making different trades. In fact, they're still continuing regardless of what's happening with volatility. I think they're aware of it. I think that there's certainly some expectations as to what's this mean for my money market rates, or what's this mean going forward as I think about compound interest, those types of things. But at the end of the day, I don't think it's going to change people from making a decision on how they're investing. In fact, we might even find opportunity where people might be deploying or still looking for the times that they can invest, looking for some of those dips.
Heather, great to have you on the show today. Thanks so much for your time.
Thanks for having me, Josh. Take care.
Time now for what to watch. We're going to start off on the earnings front. A lot of big earnings on deck, but all eyes on AI juggernaut Nvidia. Nvidia will be announcing second quarter results. That's after the markets close on Wednesday. Analysts expecting Nvidia to top analyst estimates for Q2, driven by strong demand for its AI chips. Investors will be listening closely for any commentary on the call about the company's ability to sell chips in China and its outlook for the rest of the year. Yahoo Finance will have special coverage of all things Nvidia, starting at 4 p.m. Eastern on Wednesday. Moving over to housing, we're going to be getting fresh data on Monday with new home sales. Economists forecasting sales to tick up to an annualized rate of 630,000, signaling a slight demand increase in the housing market amid an improving mortgage rate landscape. And taking a look at the economy, personal consumption expenditures data, or PCE, is coming out on Friday. The Fed's preferred inflation gauge expected to hold relatively steady in July, with total PCE falling slightly to 0.2% on a month-over-month basis. This is coming after commentary from Fed Chair Jerome Powell on Friday in Jackson Hole. Powell signaling the potential for an interest rate cut in September. We got breaking news. President Trump announcing he is doing a major investigation into furniture tariffs. In a post on Truth Social, the president saying the investigation will be completed in the next 50 days, further writing, furniture coming from other countries into the United States will be tariffed at a rate yet to be determined. This will bring the furniture business back to North Carolina, South Carolina, Michigan, and states all across the union. That news weighing on furniture-related names in the after-hours trading. Taking a look at shares of Wayfair, Arhaus, Williams-Sonoma, and RH all sliding on the headline. These companies import many of their products overseas versus being made here in the United States. Well, stick around. Much more Ask for a Trend. That's still to come. The Dow jumping to a record in today's trade as the S&P 500 and the NASDAQ soar. The rally comes as Jerome Powell's Jackson Hole remarks fuel bets on a September rate cut. And Yahoo Finance's Jared Blickery joins us now with the trading day takeaways. Jared.
You know, Josh, 20 years ago, they used to talk about the Greenspan put. Today, we had the Powell put. I think the market kind of needed this. We didn't see any red flags in the markets. And as you said, the markets were very close to record highs here, but we got some outsized performance today. And this kind of clears the way and clears the doubt as to whether or not we'll get that September rate cut. Insert a few caveats there, but it looks like it's a done deal. Here's a Russell 2000. Small caps love this, up almost 4%. Let me show you what's happening in some of the other markets that we don't talk about so often. Here's home builders, up 5% today. This is XHB. I'm going to show you a one-year chart, and it's just been kind of meandering around in this low base here, but it was managed to get to the highest price of the year. So we saw some positive action in home builders. Also KRE, and those are regional banks, highest price since I think February, sometime around there. And you can also take a look at small oil, Bitcoin, ARK components, small caps. Well, we already did small caps, but here we are just kind of flagging here in the ARK Innovation ETF. Probably need a catapult to get to new one-year highs, but this accomplished some good stuff today.
So that was up. What was headed down today?
For that, we got to talk about the dollar and rates. And this is important too, because we had seen the dollar kind of ratcheting up a little bit off of very, very low bases. So I got to put that out there. We were coming off a low base with the US dollar, but nevertheless, we've seen some sharp moves to the upside. Not today. This was that sharp move to the downside. This is a 5-day chart, and so you can see how it was just kind of ratcheting up over the week. Boom, big drop today. And I don't always show the 13-week T-bill. This is a very short-term rate, but I think it's instructive to see. Let me put this on a 1-day view so you can see how it dropped right around that Powell speech earlier this morning. And 4 basis points for the 13-week is quite a bit there. We also saw longer-term rates come in. 10 years down 7 basis points, 30-year down 4 basis points. So you put it all together, you got things moving in the right direction for a risk-on rally that has some legs.
What about crypto? Milestones we should have on our radar?
Yeah, I'll tell you what, I was looking at Ethereum, Ether, near a record. So I'm going to go to a crypto heat map here. Now, Bitcoin had a nice day too, and we can get to that. Futures had a nice day. And a lot of this happens just because the dollar is dropping. Because, you know, when the dollar drops, that's the other factor in the commodities prices, crypto prices, essentially a currency. But here's Bitcoin up 4%, but Ethereum up 14%. I'm going to show you a max chart, and you can see based on this, and these are just closing weekly prices, but if we were to show the intraday with some candlesticks, we are almost at record highs on Yahoo Finance data. You might see some headlines with record highs, depends on the exchange, but we are right there. 5,000 would seal the deal, and it looks like we're pretty close to that. So again, Bitcoin up 4%, Solana up 10%, and altogether, you're seeing a lot of positive action in the coins. If we see the dollar continue to drop, guess what? That means probably record highs in a lot of these places, maybe even Bitcoin.
What's on the Jared Blickery radar next week?
All Nvidia for me. People are going to say PCE price inflation. We kind of already know what that's going to be because we got CPI plus some of the other data, but Nvidia is a big wild card. Can it continue to power that AI rally?
We'll be watching.
You
Thank
bet.
you, buddy. Appreciate it. Stick around. Much more Ask for a Trend still to come. Our coverage continues from Jackson Hole, Wyoming now. We're heading out to our Fed correspondent, Jen Schonberger, who is standing by with Esther George, Federal Reserve Bank of Kansas City, former president and CEO. Jen.
Thanks so much, Josh. Esther, thank you so much for joining me here in Jackson Hole. It's great to see you.
Thank you. It's great to be here again.
That's right. For those who don't know, you're the former head of the Kansas City Federal Reserve, so you have done this in the past for over a decade before current President Schmidt. You heard Chair Powell this morning. What was your reaction to his speech?
Well, the chairman always does a good job, I think, in putting together a well-articulated message. And this one had 2 parts to it. One was to talk about the outlook for the economy, and he snuck in monetary policy there, as well as talking about this framework review, which is a big deal. So the speech was really, I think, so highly anticipated. And as you know, the markets had already priced in rate cuts. And so I think the big anticipation was, would he affirm that? Would he sort of push against that? And my reaction was, he opened the door. He stopped short of saying, yes, that's coming. But he did talk about how the balance of risk was shifting and that could warrant an adjustment in their policy.
Were you surprised at all? Because in past conversations that you and I have had, you've been a bit more concerned about the inflation side of the mandate. Do you think the Fed has flexibility there if we were to get some hotter inflation reports between now and the next policy meeting?
So I think these next reports are going to be very important, both on the labor side and thinking about inflation, because they will either have to affirm this message of which risk is greater here, that the labor market will weaken more or that we have an inflation issue that is persisting. My own concern, and we heard this in the chairman's speech, the condition that's required for maximum employment is price stability. And so I lean personally more heavily to saying I would want to see a very clear disinflationary path, and we have not seen that yet. And so I think these next reports could be very telling in terms of how that committee turns.
If we were to see inflation remain around this 3% level, the job market where it is right now and the Fed were to cut, would you be concerned that that would set the pathway to reignite inflation?
I would be concerned about that. And I think even today, as we see the market reaction, we already were experiencing pretty easy financial conditions. Today, you saw some accelerant to that. So I think you have to be very mindful that easing financial conditions into a time when you have inflation this far off target is a risk in and of itself. That was acknowledged in the speech today. For me personally, it'd be the thing I'd really have my eyes on.
If you had to get your crystal ball out, what does the path for policy potentially look like this fall? If they did cut in September, would it be one and wait and see? We know there's two cuts that have been penciled in. We know that we're going to get changes to that in September as well.
Yeah, I think typically when the Fed makes a move, they're going to make another move and not be in a wait and see mode. So I think it would be reasonable to think when the first resumption of cutting happens that you're likely to see more. Again, I'd be very cautious about that at this time. Again, given inflation, and I think we heard the message today, tariffs are already beginning to show through here. Now, not a one-time hit, could be spread out, but inflation expectations are a funny thing. They're anchored until they're not, and so that's a part of the framework that I really appreciated that being emphasized. I think they have to keep a careful eye on those inflation expectations.
On the monetary policy framework, we saw them drop the average inflation targeting strategy, now adopting the long-term target of 2%. And you were a member of the Fed when this was first adopted back in 2012. We're seeing a lot of the language sort of revert back to that original form. What are your thoughts overall on the changes that were proposed?
So I'm pleased to see the changes, and I'm glad to see it look more like the 2012 document, which of course was trying to be a broad statement about the committee's priorities and how it would judge, how it would approach its dual mandate. The 2020 version of that framework review introduced something that I think at the time felt like there had been a structural shift in the economy. And I think what we learned with the recent inflation episode was that framework could best serve the FOMC when it is broader and anticipates a broader set of conditions.
Switching gears, President Trump escalating the threat to oust Fed Governor Lisa Cook. Curious how you view that and the implications for Federal Reserve independence.
So we've seen this pressure for some time now coming onto the Fed in various forms, persistent for sure. And I think for the Federal Reserve, this will be a real test of its ability to carry out what is its most important function, and that is delivering on its congressional mandates on behalf of the American public. Its design was intended to withstand these kinds of pressures. And so we'll have to see. I'm confident that the committee has their focus on the right issues as they're here, and these other issues will have to be resolved with further review.
Before I let you go, do these continued attacks and threats damage potentially the public's perception of the Federal Reserve and their ability to carry out what they need to do in terms of monetary policy?
Well, it's a very good question, Jennifer, because trust is essential for an institution like the Fed that is dealing with money and how it affects the lives of every American. So when trust is undermined, whether it is through outside forces, whether it is through policy mistakes that happen, you have to worry about that, and you have to make sure that the public understands that the institution is working on its behalf.
We'll have to leave the conversation there, but Esther, thank you so much, as always, for your insights. So appreciate it.
Good to see you. Thank you.
Great to have you here in Jackson Hole. Josh, I'll send it back to you in New York.
All right, Jen, thank you. It's time now for to watching earnings. A lot of big earnings on deck, but we know all eyes are on big tech powerhouse Nvidia. Nvidia will be announcing results for the second quarter after the markets close on Wednesday. Analysts expecting a solid quarter for Nvidia, driven by strong demand for its AI chips, including the new Blackwell chip. Hyperscalers and government AI projects continuing to show strong demand, but Nvidia's H20 chip will also be in focus, with investors listening closely for any commentary on the call about the company's ability to sell chips in China. The information reporting that Nvidia is ordering a halt to H20 production in China. That's after a directive from the Chinese government against purchases of the chip. Wall Street will also be watching for any clues about the outlook for Q3 and the rest of 2025 as the company navigates chip sales in China for the rest of the year. Yahoo Finance will have special coverage of all things Nvidia on Wednesday, starting at 4 p.m. Eastern. Well, that's a wrap on today's Ask for a Trend. Be sure to come back Monday at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.